And I think we're live, Douglas. Hi, and welcome to all of you watching. Doug and I have been looking very much forward to this third edition of How to Turn Your Business Travel Net Zero, and we're pumped that we have so many joining in this afternoon. First of all, I hope you're all safe and well, sitting comfortable, either with a cup of morning or afternoon coffee, depending on where you are in the world. We can see that we have people joining from more than 10 countries. I would say I had hoped that I could say by this time that COVID was over. I think that goes for the both of us, Doug. But at least we're witnessing that the world is reopening again. COVID has been good for one thing. It reduced our emissions slightly, and only for a while. So also it has given us some time to reflect on climate change. I think personally I'm surprised how much the climate discussion has grown during this difficult times. So I think it's amazing that we can cope with two global crises at the same time, a health crisis and a climate crisis. I think many of us have been reflecting on how we live our lives and how we do business. And maybe that's also the reason that we've had so many signups for these webinars, because now that the world is reopening, that means that business travel is also coming back. And with business travel coming back, emissions are coming back. We want to make the change. We want to make it easy for people, for businesses and travelers in general to travel as climate friendly as possible. And that is net zero. So today you'll hear me give you an introduction on how to enable businesses to travel net zero. And later Doc will put things into perspective and provide you all with the context as he will talk about scope 1, 2, 3 and how to measure and report on your company's carbon footprint. As always, remember to ask questions in the chat and we will answer them at the end of the webinar. I'll just see if I can find a way of sharing my screen. We'll just jump right into it. Hope we don't have any technical issues. It's here. So the prior slide was actually this picture of Doug and I, and we have agreed to kind of skip the formal introduction due to the limited time available. If you want to learn more about us or connect, as always, just reach out to us on LinkedIn. We'd be happy to get in touch with you. Our way of life is heating the planet. All the products, all the services that we buy and consume are having some sort of negative impact on the planet and affecting climate change. That goes, of course, also for transportation. Airplane emissions have been rising more than 4% every year since 1999. And as we are becoming better and better at reducing our emissions, we expect that airline emissions will account for up to 25% of total emissions by 2050. But aren't we looking into a future where we are flying zero emission? Electric airplanes, hydrogen fueled airplanes, probably. Some of the experts that I have consulted on this say that maybe 20 years in time we will see electric airplanes, but it will be short distance, relatively small airplanes. Hydrogen might be the solution for the larger aircraft, or maybe hybrid solutions where you use a bit of both and potentially also continue fossil. To have a chance of limiting global warming, there is a carbon budget that we need to be aware of, that we cannot just continue to pump CO2 into the atmosphere. We are dragging along our carbon legacy for many years, and To meet the 1.5 degrees goal, that requires carbon removal. And that comes in many shapes and forms. I will also give you an introduction to that. I think one of the things that I hear a lot, mostly when I give talks, or now it's primarily virtual online talks, but prior to that, obviously more in real life. One of the things that I hear all the time from audience is, why don't we just travel less? And that is definitely one way of solving the issues of travel and the climate impact that travel has. I think it's a simplistic solution. I think we will see people traveling less. Hopefully, we will also travel more wisely. We will skip the travel that we can avoid, either as individuals or as businesses. But also, COVID has shown us what happens to the world and also the world economy when it shuts down. So we will be traveling again. And also, travel and tourism is an industry that simply cannot just be left behind. After all, it employs 1 in 11 people in the world's working population. So some 300 to 350 million people is part of travel and tourism, but more than a billion people their lives depend on making money in this industry. So as the world is coming back to some state of normal or new normal, we will be seeing travel and tourism also rising again. And we need to find a way of balancing that with our climate concerns. Net zero travel for us is not the usual carbon offsetting scheme, carbon compensation scheme as you mostly see it. I don't know how many of you are familiar with the term the carbon offsetting umbrella, but basically it has two elements. One is carbon compensation, which primarily is avoidances. So you buy a product or service, and the product or service is carbon offset, carbon compensated. What that means is that the emissions that is associated with the product or service, let's take a flight from Copenhagen to New York, emitting 2 tons. If it's compensated, the 2 tons are not removed. It's merely compensated, which means that there's a carbon credit that helps finance some project in the world, which could be a windmill or solar plant, etc. Avoiding more CO2 to be emitted, but it doesn't solve that problem here and now, the 2 tons emitted with your business travel. Carbon removal, on the other hand, you remove carbon from the atmosphere. You can do that in many ways. I'll get back to that. We only do carbon removal. So if you use Goodwings, we're not claiming net zero travel, and then underneath somewhere we're buying often the cheaper credits associated with a carbon compensation project. We only invest in carbon removal, which means that we remove the amount that is emitted with our clients' travel, so they, at the end, have traveled net zero. We don't claim that we have invented an airplane that, or travel opportunities that don't emit CO2 in the first place, but we take responsibility and we help our clients take responsibility for the emissions that simply cannot be avoided. Well, it's really just one small change that changes everything. Some of you might have gone to our website. As you can see, we don't sell flights. We sell hotels. Why? Because hotels is the biggest revenue driver or commission driver in this industry of online travel. You don't really make any money when selling flights. So without any money, without any revenue, there is no money to mitigate climate change. In hotels, there still is some revenue, and we use that revenue to pay for the removal of our clients' emissions. So all you have to do is simply book your hotel with us, and we will then calculate how much CO2 is being emitted with your total travels, and we then pay to remove that on behalf of our clients. So that goes for the flight too, which is the big sinner in this context. But it also involves the hotel, the transfers, even the meals. So the only thing you need to do is book our hotels and Goodwings, and Goodwings will calculate our total travel emissions and pay for the removal of those. So our net result is net zero. We have built the technology over the last 4 to 5 years. We have a platform that gives you access to the same hotel inventory as you would find on the major platforms. Roughly 1 million hotels around the world, same comparable rates, same terms and conditions. The big difference is our competitors spend almost all the revenue that they get from selling you a hotel on advertising. Altogether, close to $50 billion is being spent on ads on Google, Facebook, networks, etc., TV commercials. I'm not religious about spending money on advertising. I have no problem with it, but what we see in Goodwings is an opportunity to get our hands on $50 billion ad spend and funnel that money to projects that are removing carbon from the atmosphere. And by doing so, we can slow down the pace of which we see climate change happening. So basically, you get the same hotel, same prices, same user experience, but we spend the money differently. How do we do it? Well, this is a question that we get all the time. How do you calculate the emissions from our entire travel when you only sell us the hotel? Well, basically, when you go to our website and you book a hotel, so someone is visiting Goodwings from Stockholm and booking a hotel in Paris, we have 2 data points on you. You can see from your IP address, this person is sitting in Stockholm booking a hotel in Paris. So based on those 2 data points, knowing how you get to the hotel, we can calculate based on DEFRA, we can calculate your total travel emissions. We calculate your emissions from your flight. If you help us and you use our carbon calculator, we know from your typing on the booking on the confirmation page how you're getting to the hotel. So by doing so, you help us understand, okay, this person is taking a train to the airport, flying economy class from Stockholm to Paris and back. We can see that you're booking a hotel for 3 days, and we calculate 3 meals a day. So by doing so, we can calculate your total travel emissions on such a trip, and then we can go and remove the emissions on your behalf. How to remove emissions? This is the question that we get all the time. Basically, there are 2 ways of doing this. Either it's driven by technology solutions like direct air capture, where you literally suck CO2 out of the atmosphere and store it. This is a technology that we've been looking into. We were very close on jumping onto such a project, but at the moment, it's still at a prototype kind of level. So the cost of removing a ton through such a technology is very high, close to $1,000 US. I think maybe in 5 to 7 years' time, this is going to be a vital part of the drawdown, solution. What we're doing is we are following the recommendations by EU, OECD, UN, which is to invest massively in nature-based solutions. So nature-based solutions really is a fancy word for grasslands, wetlands, mangrove trees, tree planting in general, mineralization too. We invest in reforestation, which means we're planting trees. We're part of a project in Latin America. More than 20,000 hectares of land are being turned from grass into forest. Also, there are so many tree planting projects popping up all the time, and you can hardly visit any website these days without them claiming that we have planted X trees on your behalf. Planting trees does not necessarily remove carbon. If the tree grows in size and actually stores the amount of carbon, then of course the carbon has been removed from the atmosphere. But too many of the projects that we see popping up all over the world are simply not verified, which does not give us and ultimately our clients the level of trust that carbon will or has already been removed. We invest only in high quality and often relatively expensive verified projects, either gold standard or VCS. What this means is that every 2-3 years, an independent verifying party comes out and actually documents that the trees, more trees have been planted, and the trees that were planted 2-3 years ago or prior to that have grown in size. And they basically, through drone footage, satellite images, samples on the trees and in the soil, document how much CO2 is now absorbed. First of all, removed from the atmosphere, and now permanently stored in the trees. When they do that, basically they upload the amount of tons removed as credits in, for instance, Verra, which is one of the world's largest registries for these reforestation projects, the VCS projects. And what we do is we then we pay to remove the carbon by purchasing X amount of credits on behalf of our clients. Credits that at the current market, the prices is going rapidly up. You can testify to that, Douglas, being very close to this. At the current price level, we're talking $25 to $30 per ton removed. We basically pay to remove it. We use the sales commission that we get when you book a hotel with us to pay for the removal. And we even go as far as to register the removal in our client's name. So for us, this is a big thing, because most of the green solutions out there, you have a hard time getting this level of transparency. So what we want to do is we want to give the highest level of transparency to our clients so they can see that what we promise actually takes place. So at the end of the year, we'll be able to send you a report and the documentation, the data that says your emissions has accumulated to 600 tons. We have then paid for the removal of 600 tons. And if you click on this link, this will take you into Verra, where you can see we have registered the removal of 600 tons under your company's name. So basically, on top of that, we also provide our clients, obviously, with a net zero travel certificate or carbon certificate that documents that we have calculated their emissions to be X, and we have removed that same amount. So the net result is that they have traveled net zero through Goodwings. Since we are using our entire sales commission to remove carbon, which is quite unorthodox in our business, everyone is chasing the transactional revenue. We don't do that. We have devoted all the revenues from selling hotels to protecting the planet. Our main source of income are the subscription payments or the membership plans from the companies. I just highlight them here. You can go and check them out on the website. And this is a cost per business per month. So it's a relatively low cost. Also, the last slide I want to show you is that if you sign up before the 1st of July, you will basically be traveling net zero for free for the rest of 21. This is our Travel Back Better campaign that we have launched, incentivizing more businesses to make that decision now on how they want to restart their business travel. Hope this gave you an idea on what can be done and how we do it, how we try to make it easy and affordable for businesses of all sizes to make this transition and find a new, greener and more climate-friendly way of doing business travel as the world is about to reopen. Douglas, can you maybe put this into perspective? I know the companies that are watching this are different in size and sectors, so maybe you can give us an overview.
Yeah. Thank you for the introduction, Christian, and I would say also a good explanation on Goodwings and how Goodwings deals with making net zero travel happen. So I've had the pleasure of working for almost 2 decades with numerous governments and companies in terms of greenhouse gas emissions and the reporting and the reductions, and then offsetting as well, as Christian kind of alluded to earlier. Though governments tend to have a tendency of making accounting and reductions a really complicated system, companies are very much like a lower level of complication, especially when we're talking about small and medium-sized companies who only have so many resources to actually put into this. And of course, this is sort of what we want to talk about a little bit in this webinar today. But there's one truth that we cannot really get rid of, and that's that greenhouse gas emissions are activity specific. So that means that emissions happen because of an activity we take, whether we drive a car, we take an airplane somewhere, or we turn on the electricity switch in our office. So insofar that it's the things that we do as people and as companies, and in some cases, the things that we don't do, that causes greenhouse gas emissions. Around 2 decades ago, there was an organization called the Greenhouse Gas Protocol, or the GHG Protocol, as many use, came up with a really simple method of categorizing greenhouse gas emissions for companies. And this method has, let's say, withstood the test of time. And it's sort of the foundation for corporate greenhouse gas emissions reporting today. And this is shown in this particular slide here. The greenhouse gas protocol is divided into greenhouse gas emissions into 3 scopes. And again, we're going to just kind of bring in the basics today, since due to our limited time. But these 3 scopes are shown on this diagram. So with scope 1, it focuses on your direct emissions and activities from the company itself, such as burning fossil fuels for energy purposes in a boiler in the company, for example, to heat up water, or in a generator. And that's in your company itself. It could also be the vehicles that the company owns itself and the emissions that are done in that cases. In a really extreme example, you have someone like FedEx or DHL who actually owns their own airplanes. So that's another example. Scope 2 is focusing on indirect emissions from purchases of energy from third parties. And this is where particularly a lot of small and medium-sized companies get their greenhouse gas emissions accounting from. And this relates to electricity you use, the heating that you may be using in your company. And both Christian and I, our companies sit in Copenhagen, Denmark, so that's obviously a major part of our emissions besides travel, which is actually the major part. Scope 3 focuses on indirect emissions from both upstream activities, which you see on the left side, which is basically the company's suppliers and the supply chain, and downstream activities, which you see on the right side. And this is basically the users of the different companies' goods, including transport and disposal, for example. So taking these into account, we always recommend that a company start with really what's close to them and what's easy for them to control. So travel is obviously one of these things that you can easily control yourself. You may have to travel, but you can control how you travel. So therefore, this is kind of where we suggest companies start. So you can typically control your electricity bill, your heating, and you can control your travel. And this relates really to the fuels used in your own transport, electricity, cooling, heating, business travel, and your waste, for that matter. Then to start with the process of measuring your past greenhouse gas emissions. So maybe look at the GHG emissions that you can have in the future as well. But we generally start by collecting data from what's happened in the past. So the first thing in addressing is where the GHG emissions can be reduced by your company. So that's the first thing to do, figuring out if you can replace your lights, for example, maybe change your cooling systems in a building. And if possible, find ways to even reduce the amount of travel which you may be taking. So that's the first thing. The second thing is for emissions that you can't reduce. You want to try to reach net zero, and that's where you use offsets from GHG emissions. And this can be done through purchasing carbon credits or particularly removals, such as Goodwings uses. So next slide, Christian. Okay, so what does this kind of look like from a really operational standpoint from a company, particularly, let's say, a small and medium-sized company. The first question that all companies ask is, what will it take for me to measure my greenhouse gas emissions in terms of information, activities, and the resources that you have to put into it? So this slide tries to kind of show that. And at the same time, we also need to keep in mind this security of the company's brand and its reputation, and not to provoke bad press or be accused of greenwashing. And then therefore, it's really important that a company focus on integrity, control, and its resource use in this sense. And this relates to reporting itself. So when we look at this diagram, it kind of works in reverse, insofar that the further you look down on the diagram, the more is required. So if you look at the middle of the diagram, in the greenhouse gas emissions reporting of a company's own and internal activities, this requires the least amount of resource use, which is in orange. It offers the highest level of integrity because you can control things and get information, that's in blue, and the least amount of resource use as well. And of course, the control of activities, which you see in green. Now, the further down we go, both downstream, which you see on your right side, and upstream on your left side, the more complex things get. So there are less control, for example, of activities which happen because you have limited control, for example, of your electricity supplier, for example, because in some areas that's mandated by legislation. You have to get electricity from one supplier. And you also have the demand for resources and accounting and reporting increases as well. So finally, if you notice, if you go, for example, downstream, which is on your right side, the more demand that you have than you do on the left side, which is upstream. So the more you go downstream, you'll see the integrity level drops a little bit. You have less control over the activities, and you have to actually have more resources use. But in principle, you can spend less resources, get higher integrity, and you have a little bit more control on the upstream side than you do the downstream side. For example, your customers and consumer use. So please, next slide, please. So how do we, pull this sort of all together so that we can do this and report as a company? And again, we're really talking about the basics here. You can get really complicated, and there's really some sophisticated systems for greenhouse gas accounting. But we'll start with the basics. So first is we always recommend to ensure integrity in what you're doing. And by doing that, it's wise to use an international approach and methodologies for accounting of greenhouse gas emissions. And right now, what's the most common to use is the GHG protocol, the greenhouse gas protocol. But there's also some other good international mechanisms and methodologies that can be used depending on what sector you're operating in. And what's really important is that professional service companies, especially like consulting, accounting, communications, all these type of companies, lawyers, the majority of their emissions actually come from travel. And this typically is somewhere between 80 to 90% is greenhouse gas emissions. So therefore, you need to also select a reliable tool in calculating greenhouse gas emissions. And the amount of reliability depends on the type of tool you use. The greenhouse gas protocol has, let's say, a generic tool which can be used. And generic means it uses kind of global averages. But you can actually go a little bit more sophisticated into, let's say, data that's related to your specific country. And you can even get more sophisticated into data that's related to your particular region or city. So for example, Christian and our businesses are in Copenhagen, so we can actually get data from our electricity supplier and our heat supplier to exactly how much greenhouse gas emissions we have per kilowatt hour used, for example. And then after you do your accounting processes, you also need to report it in a respectful way and a way with integrity. And there are international reporting frameworks for this. So one is called the Climate Disclosure Project. They actually have CDP have a mechanism. GRI has a mechanism for the framework for reporting. So again, these don't actually tell you how to calculate your greenhouse gas emissions, but they tell you the way and mechanisms to report them with a level of integrity. And then finally, you come to your company greenhouse gas emissions, where you can actually have a report which clearly and transparently says, okay, this is where our activities are, this is the kind of greenhouse gas emissions we have. You can choose and indicate, whether you've done scope 1 emissions, your scope 2 or your scope 3 emissions. And again, the scope 3 emissions can be both upstream and downstream. So that level of complexity is really up to each company to decide. And some companies have easier time than others with this. And as Christian showed earlier, one of the things that's great with Goodwings is when you do travel and Goodwings offsets your travel, you actually get a report from them that shows, what were those emissions, and more importantly, how were they offset in that context. So this is the really basic down and dirty context of greenhouse gas emissions and reporting from a corporate level. So I hand it back over to you, Christian.
Thank you. I was just trying to unmute myself and get out of the presentation mode. So thank you, Douglas, for giving context to net zero travel and give all of you watching an overview on measuring and reporting on emissions. It really warms my heart to see the interest that we have experienced, the both of us, during COVID. And hopefully it will continue as we go back to a more normal life. Hope you've all have had some inspiration on how you can at least restart your travel in a better way, and hopefully it gave you appetite on how to do it net zero. Check out goodwings.com for more information. I think we're running a bit late, but it was because we had some technical issues in the beginning. But the questions that we've been getting here, I think I just wanted, maybe Douglas, if you can answer that, it's directed for you. How do you and your company, GH Sustainability, count and offset your emissions? And maybe answer that just before we end the talk.
Yeah, sure. So we've actually been a client of Goodwings for quite some time, even before they had this net zero travel. Our company is a consulting company, and we have several hundred days of travel every year. And then therefore, what we do is we account for that travel based on our flights and hotels and all this kind of issues. And actually, Goodwings system will actually make that easier here in the future from what we've done in terms of resource use in the past. My guess is we'll probably use 70% resources less than what we had before with using Goodwings. So we account for it, and then we actually publicly report our accounting, or at least the numbers, the whole numbers, and then we actually do offset as well. We also offset our corporate emissions separately than our travel, where we have specific projects where we offset. But what's important to mention is because we're a consulting company, the emissions that we have, greenhouse gas emissions, is about 85% of all of our emissions. And that's also because we're located in Copenhagen, where we have a lot of renewable energy that's used for electricity and heating. And our public transport system also has a low emissions value. So we're somewhat fortunate in that sense, but certainly the travel emissions are our biggest component.
Thank you so much, Douglas. I think we're ending the talk now. We're 10 minutes over time. So thank you to to all of you watching. Thank you, Douglas, for being part of this third edition. And have a wonderful day.